You were listening to chartingwealth.com for Wednesday, the 24th of May, 2017. We see that stocks are up for the day. The S&P 500 up 0.21%. The NASDAQ 100 up barely 0.10%. 20-year bonds down 0.68%, and about the same percent, 0.65%. Gold is down. Let's jump into these weekly charts first. We'll start with the S&P 500, as we always do. We see that we are in a confirmed down move on the weekly chart, having crossed over, going down all the way back on the 31st of March. And we see that the two-day chart, and well, before we zoom in on that, let's talk about what we see as far as the candlestick goes for the week so far. We are seeing a green open box candlestick showing upward movement on the S&P 500. We're still in a negative down move, as we just said on the weekly chart. Derivative oscillators continuing to lose downward energy. Don't have a crossover yet. We shall continue to watch, wait, and see. As we zoom into that 2-hour chart, we see that the 2-hour chart was a confirmed crossover going down. 2-day chart. We don't look at a 2-hour chart. The 2-day chart is in a confirmed crossover going down as per its crossover on the 17th. That was May the 17th, Wednesday. It was followed by more downward movement on the 19th. And what do we see happening as far as the beginning of the week goes? Well, we've got a green open box candle, the biggest one we have seen literally since the 27th of April as far as open box up movement. We still, though, are negative on the derivative oscillator. We're getting close to a crossover going up on that 2-day chart. What does that mean if indeed there is a crossover? Well, the big chart, the weekly chart, is still down, so we don't have a trade at this point on the S&P 500, or getting close to not having one, particularly with all that pullback the last 2 days. So again, continue to watch. Now, again, the crossover hasn't happened yet. Market could go down in the morning. So if we have an opportunity, where are you going to see that? Where you're going to see that opportunity in the 4-hour chart crossing back over, going down. If it does it before the 2-day chart crosses over going up, then of course you would have an entry point. We are doing our traditional method, waiting for the pullback on the 4-hour, and then if it rotates back over going down, you jump in. We haven't seen that happen yet, so we don't call it. Remember, we are trend followers. Now we're going to go back to our weekly chart. Going to take a look at the Qs. What's happening with the Qs? Well, remember, QQQ crossed over on that weekly chart, and that's the NASDAQ 100 back on the 28th, Friday the 28th of April. It was, and again, we go to our 2-hour, why do I keep saying 2-hour? 2-day chart. We see that it crossed over that Thursday before the crossover the next day on Friday on the weekly chart. We had many, many days of up movement, and then, of course, things got crazy last Wednesday, that bit of a crash that occurred, and then the market went down those 2 days, and then the next 2 days and the first 2 days of the current week, market went up. Market bounced off, actually, the signal line on the price percent oscillator to continue moving up. What's interesting, though, is the derivative oscillator has gone even more negative. And I'll tell you something to pay close attention to. When you look at where the green open box candle is for the day, it's the last 2-day candle. It's really where the market peaked back on the 15th. So again, the 15th of May. So what do we have? Well, the market's really sliding sideways. If we zoom in to the 4-hour chart, what do we see going on? Well, we see the 4-hour chart, after backtracking, actually crossed over going up right there at the end of the day. So watch, pay attention, see what you see as far as where the market goes in the morning. We're above the 2-hour. We're above the 2-day trend line, and we're above the weekly trend line. So let's see how much more room this market has to move. Our traditional trading is jumping in and riding that up. I guess I am concerned at how we don't have a higher peak. But again, we do have that crossover on the 4-hour chart. So continue to watch, pay attention, and try that traditional method that we teach of trading. If you've not listened to our How to Read a Stock Chart video, then of course if you subscribe at chartingwealth.com, you will be able to find the link to it and listen to it and learn what it is we're talking about and what we do on a daily basis here at chartingwealth.com. Let's continue to push through these charts. We had TLT, as we said, down 0.68% for the day. You can see derivative oscillators lost a little bit of energy. The PPO, price percent oscillator, is not going up at the same strength it had been, but we do have, as far as the weekly chart goes, the second week of upward movement as far as our Heiken Ashi candlesticks go. You want to know more about Heiken Ashi candlesticks? Listen to the training on the website. I will get it right this time. The 2-day chart shows us that it is an open red box candle with a long wick on top, nowhere near the kind of movement we saw on the last 2-day candle. We are currently in a confirmed crossover going up, but again, we've got a good bit of pullback over the course of the day. Now, don't forget, we're in a confirmed up move on both our weekly and our 2-day chart. We've had that rollback finish, and of course, as we continue to look at what's going on as far as our 4-hour chart goes, our 2-day chart goes, we are in a confirmed, of course, up move on that. And as we zoom into our 4-hour chart, we see that we have the pullback now is starting to occur, and we will wait and see if we have that recross going up so we actually have an entry point. We will continue to watch, wait and see. And again, markets are interesting as they are trying their best to settle out. Lastly, we're going to go to gold, up 0.65%. Remember, gold's in a confirmed up move on the weekly chart, down move on the 2-day chart. And we see that gold has gotten really, really close over the last few weeks, still is very close. This is the 3rd week where it's very close to crossing over, going down. Derivative oscillator is actually growing. The derivative oscillator crossed over going down last week, and it's moving down even stronger over the course of this week, but our main indicator has not yet crossed. We shall wait and see. Really weird though, price movement is up, indicator, at least the derivative oscillator, down, the PPO, price percent oscillator, sliding sideways. Of course, our 2-day chart isn't a confirmed down move. We are continuing to watch that up movement and see if indeed there is a crossover going up. Hasn't happened yet. That schizophrenia, the up move on the weekly, down move on the 2-day, means that we don't have a trade in gold at this time until we plug in, and of course we look at our prescient chart. That is our 4-hour chart. What do we see going on there? Well, of course, we see that 4-hour chart has been moving up quite nicely since it crossed over going up on the afternoon, late in the day, on Thursday, the 11th of May. Nice up movement. Of course, it slid sideways for a couple of days and then moved up again. Now it appears to be rolling over. We shall keep an eye on it. It crosses over going down. Those of you who like to trade that 4-hour chart, and I know several of you, many of you do, continue to watch that. It continues to work day in and day out. Folks, that's where we are as we end the day on Tuesday, go into Wednesday, the 24th. We appreciate you being with us. We always love to hear from you. We try to answer all your emails, cw@chartingwealth.com. If it's a really good question, we'll include it on our bonus feature that we put out in email format to everyone who follows us and subscribes. We do that on Fridays, so you have it over the weekend. Another good reason to subscribe. God bless. All the best from chartingwealth.com.